Hi everyone, it is July 2023 and I'm Mindy Huffer with the Beitzel Team at Realty Executives Arizona Territory in Prescott, Arizona. So in this video I'm going to talk about some of our local stats and answer some questions that I've been asked lately. So let's go ahead and get started. So the mid-year market at a glance. Inventory. Inventory is still low. It is climbing because it is summer, which is very normal. But let's look back at some of the years past. Right now, June of 23, there were 1,100 listings. June of 2016, 17, and 18, which were our very normal markets. 16, we had almost 1,500 listings. In 17, we had 1,300 listings, went down to 1,200, and then June of 19, back up to almost 1,400 listings. June of 2020 was when that buyer frenzy was really going on, and we had 1,110 listings. Dropped way down to 762 for June of 2021, and then 1,180 listings for June of 2022. So as you can see, our inventory is very low still. Here's a chart. This is from our local MLS, and these are numbers of listings, of residential listings throughout our entire MLS. So this is June of 2019, shows you we're pretty close to 1,400 listings. So you can see how it goes up and down with the summer and winter. So here's the winter going down again and then back up a little bit. This was that beginning of that buyer frenzy, so our inventory had been very low, continued to go down. The winter of 21 rebounded a little bit in June of 2021, back down in the winter of 2022, and then back up a little bit for June of 2022. This is when we saw the interest rates really start to climb. So our inventory did go up there, went back down in the wintertime, and is back up a little bit again for June of 23. That number is 1,100 listings. Prices, the average sold price, and again this is for residential listings in our entire MLS. So June of 2023, the average sold price was $527,050. June of 2022, $512,910. So prices are holding steady, and they are up a little bit year over year. June of 2021, that was during that buyer frenzy. The average sold price was $483,800. So we are seeing a climb here year over year. Not quite at the extent that we were seeing during that buyer frenzy, but that is okay. We are still seeing prices are going up. Mortgage rates. So I've been getting lots of questions lately about the mortgage rates, and they have certainly been volatile in 2023 and have had their ups and their downs, and mostly ups. They are expected to come down over the last part of the year and into next year. So this graph shows from October of 2022 to July 13th of 2023. And you can just see the interest rates were up and down and up and down. This chart shows the mortgage rates over the last 30 days. This is June 22nd of this year. We saw them down, They leveled off, they went up, they leveled off, they went down, they leveled off. Just very volatile, as you can see. July 18th, they made a great drop. The 19th, they've leveled off, but we are hoping to continue to see them level off and go down even more. The real estate market crash. I've been asked that a lot lately too. And if you've been following the news today, you may feel a bit unsure about what's happening with home prices and the fear whether the worst is yet to come. But that's because today's headlines are painting an unnecessarily negative picture. As we saw in the graphs, prices have continued to go up very steadily, not huge jumps, but more on a normal percentage. And another reason why we're not going to see the crash is home equity. Homeowners in the United States, 39% of homeowners own their home free and clear. And those with a mortgage, 29% of homeowners in the United States have 50% more equity, 50% more or more, sorry. So that is 68% of the homeowners in the United States have at least 50% or more equity in their home. Only 32% of homeowners have less than 50% equity in their home. The Wall Street Journal reported that the U.S. equity hits its highest level on record. So no, we're not likely to see a market crash. Buyers, what are buyers doing? Buyers are out there and actively purchasing homes. I know we saw when the mortgage rates went way up last year, going from 3% to 7%, many potential buyers did take a step back. They were feeling that sticker shock and decided to hold off on their plans for a while. However, as time has passed, that initial shock has worn off, and buyers have grown more accustomed to the mortgage rates that we're seeing today. And they are out looking at homes and purchasing homes and jumping in the market. Doug Duncan, chief economist at Fannie Mae, says consumers are adapting to the idea of higher mortgage rates and will likely stick around for the foreseeable future. We are hoping that those mortgage rates go down, but we don't know. A recent survey by Freddie Mac reveals 18% of the respondents say they are likely to buy a home in the next 6 months. That means nearly 1 out of every 5 surveyed plan to buy a home in the near future. So what does this mean for sellers? It still means it's a good time to sell. This low inventory is a sweet spot for sellers. Well-priced homes are selling, some with multiple offers. We're seeing that pricing your home at a competitive price, not at the highest level, is definitely the best way to bring interest to your home and to generate a quick sale at the price you want. Like I said before, well-priced homes are selling, some with multiple offers, so you're not going to be leaving money on the table. This is definitely not the time to test the market. Your asking price sends a message to potential buyers, especially in today's market. I've been telling my sellers, buyers have become very finicky. If they feel a home is overpriced at all, they're not likely to put an offer in on that home. buyers, what does this market mean for you? Two important questions to consider. Where do I think prices are headed? Our stats show that prices are continuing to go up, not at the rate we saw a few years ago, but at a more normal pace. But that means it is a good time to buy before the prices go up even more. Where do I think mortgage rates are heading? Don't know. Not even the experts can say with an absolute certainty where mortgage rates will be next year or even next month. That's because there are so many factors that can impact what happens. But many economists believe that the interest rates will continue to come down. So if you're thinking about buying, here's a few things you should consider. If you buy now and mortgage rates don't change, you made a good move since home prices are projected to grow with time. As we saw, those home prices have gone up little by little. If you buy now and mortgage rates fall as projected, you probably still made a good decision because you got the house before the home prices continued to go up even more, and you can always refinance your home later if rates are lower. We're thinking that if interest rates really do come down and fall quite a bit, we're going to have a lot of pent-up buyers jump in the market, which will definitely drive home prices up. We'll be seeing more and more multiple offers, and so it's a great time to buy now before that may happen. If you buy now and mortgage rates rise, if this happens, you made a great decision because you bought before both prices of homes and mortgage rate went up. We do appreciate your business and your loyalty, and thank you so much for watching our market videos. Whether you are thinking about buying or selling, you do need a local expert, and let the Beitzel team be your local expert. Please tell your friends about us as well. If you have questions or want some more information on the market, please don't hesitate to give me a call. We're here for you to answer your questions, get you information, and we do look forward to working with you and appreciate your business from the past. Thanks for watching, and we'll catch you on the next video. Thanks so much.